Your message to investors, don't panic. We've seen geopolitical events before. Typically, it's been a buying opportunity. We don't know what's going to happen this weekend or after the Olympics, but you would use it to selectively put money to work?
Yeah. Hi, Joe. And I'm honored today to follow two of my college classmates, Steve Ballmer and Jim Cramer. Hello to those guys, too. So, yes, I think if you look at what's happened with the market, we've been in a bear market for some of the market. There are 125 stocks over $5 billion in market cap that are down more than 40% from their 12-month high. And many of them are those high flyers that don't have valuation support, whether it's DraftKings, Peloton, Robinhood. But there are some very good names in there. PayPal, Netflix, Twilio. These are companies that have big businesses, and they're back to where they were before COVID, the stock prices. And they have achieved a great deal of accelerated adoption of their platform that's not going away. So we would be buying some of those, and also names like American Express, O'Reilly Auto Parts. You know, we believe that these stocks selling for market or below market multiples offer, great opportunities. As Jim said, you can't pick the bottom, and you might see that the stocks come in a bit before they go up. But starting to nibble, we think, is the right decision right now, considering that we see a lot of demand from consumers, industrial demand, commercial demand, a lot of liquidity in the system. And right now, we see no sign of a recession. So this is an opportunity like in 2018 when the market went down 20% in the fourth quarter. Pre-COVID, we forget about all that. But this creates opportunities if you're selective.
I haven't checked your math, but you point out a stock with a 40 PE that falls 40%, that's growing earnings at 20% a year, now has a 20 PE. You look at a Coke or a Pepsi selling at 26 times earnings, and they're not growing at 20% a year. So you might be able to find some value there. Make it. We got about 30 seconds. Kari.
Yeah, so Facebook is selling at a 14 PE. I mean, Facebook has problems, yes, but, it's selling for half of the PE of, sort of stable consumer stocks that are going to be growing earnings, 7%, 9%. Facebook will go 20%, even if it's at a reduced level because of some of their challenges. So, yeah, we think that there are opportunities in the market, and you should take advantage of them. Panicking is not the right move. Selling everything, I would caution people not to be as scared as, their heart rate is telling them.